Hey guys, what's going on? Welcome to the video. So last week the stock market held right where it needed to, and therefore keeping the immediate bull trend intact. In this video I'm going to be going over the top chart ideas for the month of June, as there's quite a few big upside moves that have potential to be on the way this month. As always, there are timestamps in the description, and let's go ahead and get into it. So we're going to skip the deeper S&P analysis this week, as there's been slower price action other than a successful hold off 576.2 and the 200-day moving average on the SPY, which was the must-hold support zone that we went over last week. As long as that continues to hold, the trend will continue to be bullish and expect dips to get bought up. Only if that zone breaks would be time to get cautious. As long as above it, expect long trades to continue to work well. So now getting into the individual trade ideas for the month of June, starting out with a long-term reversal trade setup with Target, ticker symbol TGT. So Target stock has been in an overall downtrend since late 2021, though it is now testing some major supports, and there are signs of potential reversal to start setting up. So the major supports that it's testing include the support from 2020 COVID lows at $90 per share, along with trendline support of the potential long-term falling wedge pattern. If we zoom in, we can see that it has built out a tight consolidation base just above that $90 level, and it also has some well-defined resistance levels just above this consolidation, including the 50-day moving average, which is currently at 97.26. Then above there is 98.5 to 103, which is the top of the range and can act as a strong upside trigger above. So I'd be watching for a reclaim above the 50-day moving average to start upside, which can be the signal to enter a long position with a tight stop loss back below it, and then above 98.5 to 103 can start the potential larger upside move. From there, the next big target levels above would be 120 to 125, then the 200-day moving average, which is currently at 129.25, and above there is the long-term trendline resistance, which would be that much larger breakout trigger above. As we can see, that trendline has acted as the top of the range since late 2021, including 6 different tests and rejections off of it. Break above that spot, and this can see a very large breakout. So overall, this is a long-term trade setup, and it will take a good amount of time to play out if it does so. But I'll be watching for a reclaim above the 50-day moving average to start that potential upside reversal, which is what I would watch as my personal entry point if it does so. And to keep risk tight, we can play it with a stop loss if it closes back below the 50-day moving average. So overall, this is a very low risk and high reward potential long-term reversal setup. Another stock that I'm keeping on close watch in the month ahead is Celsius, ticker symbol CELH. So the stock had a large reversal and upside move earlier this year, and since then, it has been building out a well-defined consolidation for 2.5 months, which can result in a large breakout move once it breaks. So it's back above both major moving averages, and the consolidation that is built out is below 39.4 to 40, which can act as the breakout trigger above. Breaking above $40 per share can target 43.5, 48.85, and the key 50 to 52.4 long-term pivot zone, which would be the biggest target for this breakout. And to trade this, you could either enter the position during this consolidation phase and play with a stop loss below the 50-day moving average, or on a close below the 34.75 level to keep risk tight. Or you could wait until the breakout plays out, where it would be buyable above $40 per share, and you could play with a stop loss below 39.4 or so. Overall, with these setups, the goal is to catch the easy and possible large breakout move while keeping risk as low as possible, which is why I recommend using tight stop losses like this. It may take a couple losses and re-entries for a setup to truly play out, but those losses are minimal compared to the large moves and gains once the breakout does successfully play out. And Robinhood, ticker symbol HOOD, was one that I talked about a ton in March and April as my favorite dip buy in the market, and that has played out great so far with a rally all the way back up to the swing high from February at 66.55 to 67, and it's now potentially setting up for the next directional move. So zooming into the chart, there'd be 2 main scenarios that I would watch for. So the first would be a handle building out, as this current setup can be looked at as a cup pattern. So something like this, where it maybe pulls back and finds support off the 55 to 57.3 zone before putting in a higher low before that true breakout plays out. Or the more likely scenario, in my opinion, due to the strength that this stock has shown, would just be a straight breakout out of this multi-week bull flag that is built out. So above 66.55 to 67 triggers the breakout above, and for example, that could be buyable above 67 per share, with a stop loss slightly below 66.55 or so to keep risk tight. And above there isn't really any defined resistance levels until the all-time high at 85. So if the breakout plays out, this position may just be one to let ride with the trailing stop loss and profit. And one more setup that I'm keeping on close watch in the month ahead is Tempus AI, ticker symbol TEM. So this past week, a short report came out on this stock, resulting in about a 20% one-day drop. Now, it's important to note that short reports often do have a lot of validity to them. Though in a bullish market, the market often does not care and dips get bought up. We don't know if that's the case with this stock yet, but what we do know is that it sold down right to a key support, which is the major moving average cluster, which has held as strong support so far, and also gives us a great place to limit risk and use a stop loss. So the moving average cluster is at 52.26 to 52.75, so it's playable as a dip buy with a tight stop loss below there. And as long as that support holds, this can see a rally back up to 60 to 61.5, then where Wednesday's sell triggered from at 64, and then above there can target 69 to 71.4 next. I wouldn't consider this a high conviction trade or anything, but it is a pretty simple trade idea with low risk that the market will call the bluff and this stock gets bought back up to pre-short report levels. So those are the top trade setups that I'm watching into the month of June. A lot of great looking setups as long as the broad market holds where it needs to, as it has continued to do so far. Thank you guys for watching, and for anybody interested in joining the private Discord chat, that is the first link down in the description to get my personal trade alerts, nightly watch lists, and answer questions you guys have in there. Good luck trading the week ahead, and I will catch you all next time, and peace out.